Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no.
Was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Bear Stearns is fine.
You're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
Heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it. It's so horrible. Don't move your money from Bear. That's just being silly.
This market is as volatile as you'll ever see.
Traders say this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
Don't be silly.
As the adage says, you give a poor man a fish and you feed him for a day. You teach him to fish. You give him, and no.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Just ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you're all having a wonderful weekend. Let's get right into today's episode.
The implosion of Chinese property giant
Evergrande.
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 Evergrande. Evergrande brings back the specter of the fall of 2008. That's when one of the largest investment banks in the United States saw the value of its assets plunge, setting off a crisis of confidence that ended up rocking the global financial system. It's called simply a Lehman moment, and one of the few things everyone can agree on is we don't want another one.
Evergrande's massive debt problem has rippled out into global markets, with the S&P 500 seeing big swings. Beyond the potential default, international investors are particularly worried about what may happen next, as a big chunk of China's economy is linked to real estate.
Nearly 29% of its total GDP, much more than it represented in the U.S. economy at the peak before the great financial crisis of 2008.
In total, Evergrande owes more than $300 billion.
It's one of the most indebted companies in the world. Evergrande borrowed a lot of money, what we call offshore, in international financial markets, and it's probably not going to pay it back.
The Evergrande situation seems very particular to China. There's not a lot of direct United States exposure.
No, no, no.
The big Chinese banks are not tremendously exposed.
That's just being silly.
While we must monitor carefully for a spillover effect on financial markets globally, at this point, I don't see this developing into a global crisis.
Don't be silly.
This one company has got markets on edge, and its struggles could have big repercussions for global investors.
A collapse of Evergrande could cause problems way outside China's borders, though. The global economy and even crypto could take a hit. Tether, the world's largest stablecoin, said in recent days that it's not directly exposed to Evergrande's debt.
So what exactly are stablecoins? Well, stablecoins are digital currencies that are always meant to trade at $1. In times of volatility in crypto, they serve as a safe haven for investors to turn to rather than having to cash out into real-world dollars. The issuers of stablecoins maintain their $1 peg by creating or burning a certain number of tokens to correlate with their collateral. The safest stablecoins do so simply by holding an equal amount of dollars in a bank, so $50 million in the bank corresponding to 50 million coins. But since stablecoins are generally unregulated, stablecoin issuers can also hold other assets rather than just cash in a bank.
But isn't Tether okay, so let me just be frank with you here, I think Tether was heavily manipulated.
For example, Tether, the first ever stablecoin, recently unveiled it only holds about 75% of its portfolio in cash and cash equivalents. Only about 5% of its collateral is actually in cold hard cash. The majority is in short-term corporate debt known as commercial paper and other things like gold and bonds that can go down in value. That introduces some risk, of course, and Tether has also never been audited.
One of the reasons that people are worried around the Evergrande scenario in China playing out and what it could do to the crypto markets is because of what's backing Tether. So it's one-to-one, but it's not backed by dollars. It's actually backed by commercial paper, mostly out of China.
So a lot of us are asking, what exactly is commercial paper? Basically, its purpose is for companies to meet their short-term financing obligations. This could be for payroll, supplies, anything like that. So, for instance, if an airline is managing its receivables and it doesn't have the cash coming in to meet its short-term needs, it still obviously has obligations to continue financing, or continue operating, I should say.
There were worries about Tether and some of the potential exposure to Evergrande. Tether came out and said last week that they don't have any direct exposure to Evergrande. They tried to get ahead of this, said, to be clear, our commercial paper is not tied to Evergrande.
I don't believe this. I don't believe you.
If the tethers are indeed sufficiently backed, then surely a rock-solid audit is the best way to put all these accusations and FUD firmly to bed. But of course, there isn't, so this fuels heavy speculation. But in April 2019, the wording on the Tether website quietly changed to the following. Every Tether is always 100% backed by reserves, which include traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities.
Even though Evergrande's commercial paper might not be backing Tether, there are still other companies out there. There's sort of a ripple effect out there that if Evergrande did fail in a worst-case scenario, there are certain analysts that are worried that some of those Chinese companies that are at risk could be some of the companies that are actually backing Tether.
As I told you last month, Tether has more than $60 billion in reserve assets. And as of their last disclosure, roughly half of that is commercial paper, which would make Tether one of the largest holders of commercial paper on Earth. But here's the problem. I know a lot of people in this market, and nobody in the commercial paper world that I know seems to have ever heard of these guys. If they're not trading, if they were trading our commercial paper, everybody would know them because they're so big. Tether says they're buying this paper through bank intermediaries. So maybe that's why nobody's heard of them, but we don't know who those banks are. More important, we don't know what part of the world this paper is coming from.
There's all these businesses around the world that are all structured about how to launder money out of China through phony real estate deals, buying second houses, third house. I know, I see them all over the world because people are desperate to get their money out of China.
In 2019, the New York Attorney General accused the companies managing the stablecoin Tether, also called USDT, of making false statements to investors about the cash reserves of its currency. The investigation found that in 2017 and 2018, Bitfinex, a cryptocurrency exchange that has common ownership with the company that controls Tether, relied on a third-party company named Crypto Capital Corporation to handle deposits and withdrawals on Bitfinex's trading platform.
Bennett, can you give everyone kind of an introduction to what Crypto Capital Corp is?
Sure. Crypto Capital Corp was a Panamanian and Colombia-based payment processor that acted as kind of a shadow bank for a whole bunch of cryptocurrency exchanges. A lot of these exchanges struggled to get banking, so they relied on payment processors like Crypto Capital Corp in order to service their customers.
The New York Attorney General's office said that Crypto Capital Corporation failed to process some of these orders, and Bitfinex lost access to $850 million of its customers' money.
Now, Crypto Capital Corp itself was a criminal enterprise implicated in money laundering for the cartels, embezzlement, counterfeiting, and a whole bunch of other fraudulent practices, which eventually led to them being shut down by authorities of several different countries.
As part of a settlement with the New York Attorney General's office, Bitfinex and Tether Limited paid $18.5 million in penalties and stopped trading activity with New Yorkers.
This is finally coming to an end.
Bitfinex and Tether said the amount of money they agreed to pay should be viewed as a measure of their desire to put the matter behind them. The firms did not admit or deny any wrongdoing. Industry insiders say this investigation should be a warning to all companies that created stablecoins and to expect the stablecoin industry to be more tightly regulated in the coming years.
What happens if Tether goes down? According to Dragonfly Capital managing partner Hasib Qureshi, the legal action against Tether would be a disaster for the industry. But as it always does, crypto will eventually recover, and when the dust settles, we'll enter the third stage of crypto money. Order books will reconstitute themselves around a new crypto dollar. International crypto markets will quickly acknowledge this new standard, eager to get back to business.
Well, there you have it. And as these dominoes begin to fall, the idea that Tether has been providing shadow banking services to the entire Chinese property market is really starting to sound a lot less like a conspiracy theory and a lot more like a looming threat to the entire crypto market. And if true, this would add even further confluence to what we've been seeing in these charts as far back as April of this year. Now, Tether usually prints USDT as the crypto market rises in response to increasing trading volume, as they did earlier this year when prices were heading up towards that $64.9 thousand all-time high. However, they continued to print more USDT after the prices started to fall, printing about $15 billion worth of more USDT in late April into June when the prices were starting to fall. Now, coincidentally, this was at the same time that Evergrande and other Chinese property developers were starting to report risks of default, making it seem like Tether could have been providing them with the much needed liquidity required to pay their debts. And the Chinese government, let alone anyone else in the world, wouldn't have even known about it. Now, Reuters also reported that Evergrande affiliated Shenzhen Bank is under investigation after it illegally loaned up to $20 billion to Evergrande through, quote, indirect channels. Likely through one of a number of shell companies or subsidiaries like the Crypto Capital Corp fiasco we mentioned earlier in the video. Now, it's also worth noting that, again, $20 billion is a huge loan, even for the world's largest banks like JP Morgan. Now, a mid-sized Chinese bank having access to that kind of money is a little bit suspicious. But then in July, Fitch Ratings, one of the only 3 ratings agency in the US recognized by the SEC, came out and said that Tether could disrupt credit markets due to its commercial paper issuance. 1 month prior to that, the Boston Fed president announced that stablecoins and specifically Tether could trigger a crisis in the financial markets. So, how close are we to a possible catastrophic crypto crash? Let's go ahead and take a look at these charts. Okay, so again, we've went over this chart in a few episodes. On the right here, we have the late 2019, early 2020, right before the major market crash. Here we have current price action. So if we take a look here at these 2 different points in time, we can see the price structure looks insanely similar. I mean, it's really undeniable how similar this price action is. After we got the higher low and then pushed to the upside, we did retrace all the way up to the 786. Here in 2019, we retraced to the 618, which makes sense. And then, price fell down to the 5 fib level, got a bit of a bounce back up towards the 200 or the 50 moving average, 50 daily moving average. And what are we looking at right now? So we're looking at something almost exactly the same. So we have this consolidation, push back up to the upside. We got our golden cross, again, retraced to the 786. And what did we do? We came down, we got a bounce just above the 50% fib level, and we pushed back up in this golden cross, and we're getting denied again right here at the 618 retracement, right where price was rejected back back in 2020, right before the major market sell-off. So here we are on the Bitcoin daily chart here. Let's go ahead and bring up the drawings. So as you can see, we were in this rising wedge. It did a break to the downside out of here and has since put in this falling wedge, which is a pretty bullish structure here. So naturally, we should be looking at some continuation to the upside as the measured move of this falling wedge is up close to the top of the wedge. Now, however, we do have this strong overhead resistance coming down from the all-time high all the way down here to the high of 52.956.47. This is our point of decision. So if we do see the bulls push price action above this overhead resistance, then we will become pretty damn bullish here in the short term. Our first breakout buy target is the 49.06 level. It is a pretty aggressive breakout buy there because we still could get rejected at this overhead resistance. However, if price action does break to the upside here and we see price action cross the $52,000 level, then we will be looking to enter into a long here on the retest of this overhead resistance. However, given the current macro environment, I really do not see Bitcoin making it across this overhead resistance. It's likely that we will come up and test this here. I do have the sell target right here at $49,915,000. And then from there, we are looking for continuation to the downside. Now, if we look here at the 21 weekly exponential moving average, you can see we did hold support here. The bulls did get a nice bounce. And again, approaching this overhead resistance, which will really be the point of decision that we are looking for. All right, so taking a quick look here at Ethereum, again, very similar market structure. Again, this overhead resistance is what we're going to be paying close attention to. Should Ethereum push above this overhead resistance, then our breakout buy here is at 43.51.18. If we do get the bulls to push above that, then we'll be looking for a retest entry on a bullish confirmation of this now resistance that would confirm it as support. And then we could be looking at an $8,000 Ethereum fairly soon. However, that's not what I think is going to happen. If we do get the break below this bearish confirmation price right here at 26.94.42, then it's very likely that we're going to push down first to 23.81, then 18.63, 14.87.97, down to 906.42, and then we could be all the way down here at 741.86, an almost 83% move from 23.81. Now, while so many across crypto YouTube are so annoyingly confident that Bitcoin is headed to $100,000 next weekend, we've taken the opposite view. We've been doing our best to try and fit the running narratives to what it is we've been seeing in this price data, but until now, nothing was really lining up. The inflation argument, bull. The supply shock argument, bull. I mean, I could go on, but my point is this. Everything you need to know about where prices of Bitcoin, Ethereum, and the broader cryptocurrency market is headed is in the charts. These charts will tell you what's bull and what's relevant. Not some boomer with a webcam and an internet connection live streaming from his mom's basement. Understanding technical analysis, it gives you insight into far more than price action. And once you're able to understand it, even on a modest level, your nose for the truth becomes that much better. That's it. That's all I got for you guys today. Thank you so much for dropping in and sticking with me until the end. Don't forget to like, don't forget to subscribe, and don't forget to join that free Telegram group. The link is in the description below. If you're interested in learning technical analysis or you just want to join the members only Telegram group, go ahead and head on over to our website, 3candlecollective.com, and submit your information today. We are giving away some special free access passes to our technical analysis analysis basic training course. Again, it's 6 chapters. It's 44 videos. You can get through all of this at your own pace. Each chapter has its own chapter PDF, and there are a ton of useful resources in here, especially for the new trader. Again, that's 3candlecollective.com. Thanks for hanging out with me, guys. I'll see y'all in the next video. Peace.